There's an investor mindset shift. Wow, I didn't realize that was going to be difficult to say when I wrote that. There's an investor mindset shift happening right now, but nobody, almost nobody, is talking about it. It's not about growth. It's not about scaling faster, and it's definitely not about chasing returns. The investors who are going to be standing 5 and 10 years from now are playing a completely different game. It's one based on durability, discipline, and alignment. Today, Bill and I are unpacking the investor mindset shift that nobody is talking about and why it matters more than ever. And Bill, you and I actually did the episode last week on setting ourselves up for the next 5 years. So I felt this was a good gear shift. It's still in that same vein, but we talked about it last week about how so much of this game, so much of what we do is about mindset. It's about being in the right mindset. It's about understanding the mindset of the business and the mindset of the sellers and the mindset of the buyers. This is very much a mental game. So we talk about the math all the time. Bill and I are always saying, buy the numbers, buy the numbers, buy the numbers. But we really don't talk about the mindset other than to say you got to get started. So today we want to talk about the mindset and the mindset shift that is going to make investors who are getting into the game now or who have already been in the game more successful. So let's start off, Bill. First of all, how you doing?
I'm doing wonderful, brother. Great to see you as always. Love doing the Investor Guys podcast with you. We got to be in the 230s, 240s
I think
on
we're
the
like
number of
250s or
episodes.
260s maybe. So
So somewhere around there. So love doing, and we've been doing it for a while. Before we came on, we were talking about reliving a little bit of the celebration we did on our 100th episode, which seems so far in the past right now. But you said something that I'm really in tune with, and you mentioned alignment. So speaking of being in tune with alignment, and man, I love alignment. And your life, your business turns when you're in alignment. We do another podcast where we're going through the Bible, and not to cross over too much, but our spiritual life is our alignment with God. Our business life has to be reflective of everything that we believe in. We can't believe one way. Like I had a buddy one time that um, claimed to be spiritual, not, he made a very distinct definition of the difference between being spiritual and being religious. And I'm like, okay, fine. Um, but he owned a strip club. And I'm like, and he was unhappy. And one of the things we talked about was you're not in alignment. Your life, everything that you do has to be in alignment, or you're not going to be happy. You're not going to be fulfilled. You're not going to be challenged in a good way if we're out of alignment. And by the way, we can have our life in alignment and yet spend too much time in one area of our life and it gets out of balance again. And that's what alignment is, balance. And so we have to, I love the fact that we're going to talk about alignment today, one of my favorite topics. Back at you, brother.
yes. And while you're talking about it really quick, this nothing to do with real estate. I mean, and everything to do with real estate. It's kind of ironic. I've written a number of books where alignment is very much the topic of those books. Two of them that I recommend highly are The Integrative Apex, which is a term that I created myself for finding that alignment, and Empower X, and that's empower hyphen EX, which means exponentially, which is about how to find that alignment and how to put it to work for you. If you want to read more about those, I'm not going to waste our time on investing, but If you want to read more about those, you can find them at empower-exlife.com. Both those books are there, and we've got a lot of programs that are related to them and empowerment. But that's not why we're here. I want to start talking on our first point, which is growth to durability. Most investors are still wired for expansion, but the markets don't always reward growth consistently. They absolutely always reward sustainability. So keep that in mind. Are you in an expansion mindset? Are you in a mindset where I need to buy more properties? I need to add to my portfolio? Or are you in a mindset that I need to start fine tuning my portfolio to where I can maximize the value of the portfolio, maximize the income from my portfolio? A lot of people who are first starting out, and Bill, you've seen this before, they don't get the two differences. You can build the value of your portfolio without increasing the amount of dollars in your pocket every single month. Now, that doesn't make a whole lot of sense, but you may only be able to grow the value of your portfolio. You may not actually be able to do anything with the current properties in your portfolio that are going to grow dollars in your pocket. However, you can increase and improve the value of your portfolio. If you can do it to where it's a situation where you're putting more dollars in your pocket, that's great. There are things that you can do to put more money in your pocket while your portfolio actually decreases in value or doesn't gain as much value. And think of slumlords in this particular situation. Rents always go up. They go up for slumlords also. Slumlords, unfortunately, don't invest in their assets. That is their portfolio. So the value of that asset is fighting appreciation the entire time. So start putting yourself into that mindset. Are you looking at growth, or are you looking at survivability? Are you looking at increasing value, or are you looking at just acquiring assets? Now, I've got some insights on this, but I want Bill to weigh in.
Yeah. I want to do a quick sidebar. You'll see me get busy from time to time when Kevin's talking. And that's because whenever we do the podcast, I always have a notebook handy, and he spurs um, thought in me all the time. So I hate to lose that. So I'm always grabbing my little notebook there and jotting stuff down right in the middle of the podcast. And I think you guys, when you come to the podcast, might think about that as well, because we might say something that you want to make sure you don't lose down the road. So the durability part of it, and cash flow, in my opinion, has is such a key component in durability. I was listening to George Burns back when he was alive, the legendary comedian, and he was asked in his 90s, "How do you become a legend?" And he said, "You outlive everybody." And everybody laughed, but it's a very true statement in that the people that become legendary in any industry are people that have been doing it at a successful level year in, year out, year in, year out. Kevin and I have been around long enough that we get people that rush into our life, other trainers, and they rush out, whether they intend to rush out or not, where you look up 3, 4, 5 years down the road and you go, whatever happened to that guy?
Yeah.
I was literally this morning, I got up a little chilly. I grabbed a hoodie and threw it on, and I looked down, and it was one of those guys. It was a guy that had sent me some swag from his company, and I liked it. I was like, "This is cool. I'll wear this." Yeah, and I grabbed that, and I didn't realize it until I had it on. I kind of looked down as I was putting it on, and I was like, "Wow, I haven't heard from this guy in over 2 years. Phone numbers are gone, doesn't respond to the email. I don't know if it's still functional or not, but who changes their cell number? Either somebody that has had catastrophic failure or doesn't want anybody to be able to get in touch with them anymore.
Yeah.
And so lack of durability in our portfolio is the same way.
Thank you for watching the Investor Guys podcast.
The Investor Guys podcast will be back shortly.
Most investors are just gamblers with a better vocabulary. They hope the market moves. They pray the bank says yes, but hope is not a strategy. At the master's level, we operate on the physics of finance. The Heritage Master's Training is a 14-module surgical strike on the marketplace, the most comprehensive investing education ever created. From the psychology of wealth to the literal mastery of the asset. We don't teach you how to buy a house. We teach you how to engineer an empire. If you want Real Estate 101, go to YouTube. If you want the Doctorate of Acquisition, apply for the Master's Program today at heritagerealestateacademy.com.
Absolution X, limited editions, lifestyle apparel like none other. Get yours today at absolutionx.com.
You are watching the Investor Guys podcast.
And a little bit of George Burns curiosity here. When I lived in California, one of my businesses, in fact, one of my early hobbies was photography. And I used to shoot George Burns' birthdays for about 5 years, and he would do them at Caesar's Palace in Las Vegas. So somewhere back before digital pictures on negatives in this closet right here, I probably have some prints of me and George Burns, as well as the Brady Bunch gang and a lot of other people whose weddings and events and everything else that I used to shoot when I lived in California. A couple of key insights on this topic of durability. Okay. Historically, the majority of investors, they lose after periods of aggressive growth, not during downturns. We're always worried about what the market's going to do, what the market's going to do. Focus on your expansion policy. Focus on your expansion strategy. Aggressive periods of growth are usually the most harmful to investors than anything the market's going to do. The good thing about the real estate market, and Bill and I have been in it for a long time, is it is fairly predictable and doesn't usually change overnight. However, if you are investing aggressively and you're acquiring properties too fast, you may be looking at the wrong things. You may be over leveraging. Those things can happen, maybe not overnight, but within 30 days, 60 days, 90 days. And in the real estate world, that's pretty fast.
Yep.
Over leveraged portfolios collapse faster than underperforming ones. Keep that in mind. Over leveraged. That means that you have too much in there that you can't sustain it. That is more catastrophic to your portfolio than properties that are underperforming. And honestly, if you're listening to Bill and I, you shouldn't have properties that are negatives. When I say underperforming, Bill and I have properties that are underperforming, but they're still in the black. They're still putting money in our pocket. They aren't earning what they should, and maybe we need to take some time to figure that out. Okay. Underperforming doesn't mean grossly under profit. Okay. I would rather have a portfolio of underperforming properties that was still putting money in my pocket than an over leveraged portfolio that I'm having to scramble to sustain. The best long-term investors, they optimize for how long they can stay in the game. Bill and I are successful at this because of our longevity. Exactly what he said. There are so many gurus and wannabe, whatever you want to call them, they were flashing the pants. They had the next best thing. They had this version of things that they said they were going to patent that they never could because of nothing new in this world. Okay. And they were flashing the pan because they weren't looking at the longevity of this. They weren't looking at 3 years, 4 years, 10 years down the line. And that's exactly what you need to do. One of the first episodes, Bill, and this, I still talk to people about this all the time. I literally talked to a young lady who's 21 who does rental cars the other day about this. We talked about how you can take $50,000 and turn it into over $1 million in income after 11 years. And that's one of our first episodes if you want to watch it. That is a longevity plan. Everybody wants to say, I want to get quick rich fast. I want to get rich quick. That goes back to what I was talking when we first opened up, that the integrative apex. And essentially that's, picture your life as a pyramid. Okay. Everybody wants to focus on the capstone at the top. They want it, they want that capstone, they want that point, but you can't build a pyramid from the top down. You have to start at the bottom with a good foundation. And that is what you need to have longevity. If you just want to be a flash in the pan and make a bunch of money really quick and then be broke, go for it. That's not what I want. I know that's not what Bill wants. I know that is not what enlightened investors want. You need to start planning for how long you can stay in the game. Bill and I, this is in our blood. We will always be in the game.
Yep.
We will own the real estate that they put us into. Okay. We will always be in the game. Durability, it may not be exciting, but it compounds quietly while others are resetting.
There is a great Tony Robbins quote, one of my absolute favorites, and it is people overwhelmingly overestimate what they can achieve in 1 year and overwhelmingly underestimate what they can achieve in 10. And you look back, especially as you start getting in your 40s and older, and there are times that, like when I will talk to my boys, and they were like, "Well, that's going to take 2 or 3 years," and I'm like, "Are you planning on living another 2 or 3 years?" Well, yeah, Dad, duh. Okay, well, guess what? If you don't do it, you're not going to be any different or much different than you are today, 2, 3 years from now. And guess what? When you start to understand that, then it's easy to go, hey, you know what? We were yakking the other day about long-term plans. And, that it came up with Paula again about when are you going to stop? And I said, we've had this conversation. It hasn't changed. I'm not ever going to stop. God's going to stop me at some point, but I'm not going to voluntarily go, yeah, I'm just going to grab the old rocking chair and sit on the porch here. Ain't going to happen. And as long as we have our faculties, you can do this business. And it keeps you alive and young. Yeah, I'm 70, and which is hard to even say, but people go, no way. That hang around a little bit, no way. And it's because I think younger. And I think younger because of all the things that I'm involved with. And my life wasn't built on retirement. There's so many people that they build their whole life around retirement. And, Paula's been on me about writing another book. She said, you've got to write a book about your life experiences because you've done so much that so many people have not ever come close to doing. And I don't want that to sound wrong. Um, I've had a lot of incredibly wonderful experiences. The
Pleasant.
vast majority of those ran alongside my real estate business and happened because of my real estate business. My real estate business allowed me to do a lot of other things. I'm meeting with a guy this weekend because one of the things I got to do was travel the country multiple times, not teaching real estate, travel the country before I ever started doing that. As Kevin knows, I pit crewed an IndyCar team for 2 years. Would not have been able to do that In fact, in the 99, during the month of May, back when it was a full month, and I'm in Indianapolis, I closed 2 transactions while I was in Indianapolis racing. And FedEx, man, just, we didn't even have DocuSign in 99. We did FedEx, everything, title company, boom, stuff. My funds got wired in while I was great. It happens because you have that long-term plan. When you get your business running, one of the things you'll have available that besides a lot more cash, and that's what everybody focuses on, but you'll actually have a lot more time on your hands. And what are you going to do with that? And most people, well, that'd be great to have. Well, this business does that unlike any other that I've ever seen. So, durability, you bet.
Yeah. Not just time on your hands, but the finances to actually enjoy it.
Thank you for watching the Investor Guys podcast.
Most people play the game of real estate just to survive. They chase a deal to pay a bill. But the master doesn't chase. They architect. They don't look for deals. They recognize value before the world even knows it exists. You aren't looking for a career change. You're looking for the PhD in wealth. You're looking for the law of the harvest. Heritage Real Estate Academy. This isn't for agents. This is for those who intend to own the world, not just work in it. Mastery is the only shortcut to legacy. Everything else is just hustle. Secure your place in the lineage of wealth at heritagerealestateacademy.com.
Absolution X. Lifestyle apparel like no other. Limited editions. Unique, exclusive designs. Seek your absolution. Get yours. Only at absolutionx.com.
Thank you for watching the Investor Guys podcast.
Bill and I jumped on. Bill and his fiance are trying to decide if they want to relocate somewhere. And they have the luxury, they have the option of being able to choose what they want to relocate. They're not relocating to retire. They're relocating because when they make a new start of it, they want to be in a new location. He's not saying we need to move someplace more affordable. He's not saying we need to downsize. He's saying, let's find something that we love, that is amazing, that is beautiful, so that we can start our life there again at 70 years old. And that is one of the benefits, just one of the many benefits that real estate provides for us, is that financial peace of mind, which you'd be surprised goes a long way towards other things like eliminating stress, eliminating the cortisol that is caused by stress, uh, relationships, our mental health, our emotional health, our physical health. It goes a long way. And one of the things that Steve Jobs said, and I don't want to put all of our focus on money because there are things that are more important, such as relationships and family. Steve Jobs says all the money in the world won't keep you from dying. And it's true. However, I know people who have passed away. Bill started talking about at the beginning of the show about our 100th anniversary. There was somebody who sat at that table who's no longer with us because they didn't have the resources that they needed in order to treat a situation early enough. And she passed a year ago, actually in March. Money won't keep you alive forever, but it can keep you healthier. It can keep you happier. It can keep your family healthier. And one of the things I talk about in some of my other podcasts and some of my other businesses is legacy. And real estate is one of the best ways to build a legacy. And legacy is more than just the money or the portfolio that we pass on to our family. Legacy is much bigger than that. But real estate is a strong linchpin in that legacy that we want to build. Point number 2 on mindset is deciding whether you're going to be an operator or a speculator. And I'm going to tell you the differences between both of those. Obviously, they're different, but in my mind, a speculator bets on appreciation. And if you're in real estate at all, you've seen this before, you may be that person. You're saying, well, this property has been appreciating for the last 3 years. I think it's going to appreciate for another 9. Okay. You're betting on appreciation, and that's your strategy. And that's not a solid strategy. They're reacting to headlines and they're talking about trends. They're focused on whatever trend it is that sounds good, sounds hot, sounds viable right now. And that's where you get those flash in the pan gurus. They latch onto a trend that they think is the end all to beat all, and they go out and they sucker all these people into a program based upon this trend that goes away. How many trends in our life, not just real estate related, have we seen come and go?
Yeah.
There were trends that were amazing. People were jumping on board, and now they're nothing. I remember when Betamax came out. I remember when VHS came out. How many people have Betamax tapes anymore? Some of you may
And
have VHS
laser
tapes,
disc.
but who watches them? Laser discs. Yeah, those were all hot trends, not real estate related. And there's been just as many hot real estate trends that were out there also. They fade. Don't base your investing strategies on appreciation, on the headlines, on trends. Operators, they build and they set up and they manage this as a business. It's not investing for them, it is their business. It is a business of investing. And Bill talked about this a little bit in just the last segment when we were talking about durability. If you want something that is durability, you don't look at this as a side gig. You don't look at this as a hobby, and it can be. Okay. But if you want something that's going to put you into that wealth niche, you want to build this as a business. You want to set it up as a business, and you want to control costs. You want to control risks, and you want to control the outcome. By setting this up as a business, you give yourself so many more advantages, including tax advantages, to where you can control costs, you can control the risk, and you can absolutely control and direct different outcomes. Focus on the execution. Don't focus on predictions. Don't focus on what the TV news is telling you the real estate market is doing or going to do. Okay. They're not real estate investors, they're talking heads. Okay. Tune in to podcasts like Bill and I's podcast, and there are other great ones out there as well. Tune in and find out what investors who have been in this game for the last 30, last 40 years are saying. Okay. You are never, ever, ever going to find an investor like Bill and I or any of those others that will tell you you need to stop investing in real estate. You need to stop now because this. You need to stop now because interest rates are getting high. You need to stop now because there's a glut in the market. You need to stop now because people aren't selling their properties. There will never, ever, ever be, I know I'm speaking for Bill, there will never be a moment when Bill or I are saying, don't invest in real estate anymore. It's not a good investment. Don't do it. It is always going to be a good investment. You just need to set yourself up. You need to position yourself for the right mindset, which is what we're talking about today. Couple of statistics in real estate and private investing: operational efficiency. That is cutting your costs. That is improving your outcome. Okay. Cutting risk. That can account for 30 to 50% of your returns over time. Remember, we're talking about a longevity plan here. Okay. Imagine having a property for 10, 20, 30 years, and 30 to 50% of your returns on the property being from the way you manage it, being from cutting costs and being efficient. Market timing contributes far less to your success than people believe. Yes, there's a right time to buy, there's a right time to sell. But don't sit there and watch the clock. It's not like stocks and bonds where you have to sit there and you have to watch and watch it tick up and say, is it going to drop? Is it going to? Like I said, we've got much more time than that for real estate. Don't focus on what the market is doing so much as what your strategy is, especially if you're holding. Whatever the market is doing now, as far as the purchase price of your property or the sales value of your property, doesn't matter if you are making money on the property by holding it. If you're holding it for rent, if you're holding it for uh, depreciable asset value, all those different things combined, if you've done your numbers and that's why you're holding the property, you don't care about what the market volatility is because you're going to have this thing through all kinds of highs and lows. And your lowest low will never be as low as the high that you're going to sell this thing for, even in a low point in 10 years. Speculators, here's what I tell people all the time. Speculators need the market to cooperate with their strategy. The market isn't going to cooperate with your strategy. Okay. Operators create a strategy that has nothing to do with the volatility of the market. What we've covered so far is the foundation of this mindset shift, moving from growth to durability, from speculation to operation, and from noise to discipline. But this is only half the conversation. In part two, we're going deeper into how patience becomes a competitive advantage, why alignment quietly separates long term winners from everyone else, and how investors sabotage themselves without even realizing it. If you're serious about building something that lasts, not just something that looks good, make sure you're subscribed and join us for part two. This is where the real separation happens.